This is the Value Investor Podcast with Tracy Reineck. All things value, all the time.
Welcome to this week's Value Investor Podcast. I've been mulling over the question of whether or not you can be a value investor and also buy for growth. And as I've said before, I believe you can. Benjamin Graham, who has long been considered the father of value investing and one of Warren Buffett's mentors, came up with the PEG ratio, and that's a ratio that combines both value through a low PE with earnings growth. He felt that just PE alone didn't tell the whole story, and that's what I feel too. The standard PEG for value investors is to look for something under 1. So you'd have like 0.5 or 0.6 or something like that. That would be considered having both value and the growth. But you don't need to worry about figuring out how to find the PEG because all the financial sites tell you what it is, including Zacks.com. We have the PEG on our quote pages. So you don't have to go take the PE and divide by the growth and all that stuff or find all these numbers. You can just plug it in there. And usually on a lot of these financial sites, you can easily search for stocks using just the PEG ratio. You can plug it in for PEG equals or less than or equal to 1 and find out, all the companies that have this value plus growth ratio. And I think you'd be surprised at what you might find because I plugged it in. And even though the value and growth is somewhat rare, they're still out there. And I was able to find over like 150 companies that had a PEG under 1. Now, I also looked for a Zacks rank of 1, 2, or 3, which is a hold. And you might be wondering, well, Tracy, why are you looking for the holds? And that's because there's nothing wrong with the hold. I always kind of see the hold as being, kind of like pass in class when you had pass and fail. It's not the fail. It's not the 4s and the 5s or the D or the F. It's just the hold. And the vast majority of the stocks that we cover here at Zacks are in the 3s. And it moves, the Zacks rank moves daily. So the 3 might become the 2 or the 1. Of course, it could go the other way too. But, it's basically just things are kind of neutral here. And so I don't mind looking at the 3s. I'd, prefer 1s or 2s if I can get them. But the 3 tells me that things are just kind of stable. So I plugged that in, like I said, and I also plugged in earnings growth of at least 10% in addition to the PEG ratio, because I like to see the double-digit earnings growth. I'm kind of greedy when it comes to the growth because you can always get, 5% growth, 6% growth, but why not go for the real holy grail, which is the double-digit earnings growth? And I also like to see it for both the current year and next year if I can get it. And that proved to be a little more difficult for me when I was finding a couple of stocks here to talk to you about. So let me tell you, I did find 3 quality companies. So I plugged it in the screen. I got a whole bunch of choices. And then, of course, you have to go through it all, but I went through it for you. And there were a lot of good choices, but these are my top 3. First of all, I found a large cap, and a lot of the large cap pharmas right now have really good valuations because they sold off after the Valiant mess, and all of them got thrown in. It was throwing out the baby with the bathwater. Everybody just evacuated all the large cap pharmas, so they're cheap and they have growth because a lot of them do not have the problems that Valiant had. So my first choice is a company called AbbVie. Its ticker is ABBV. That's B's as in boys. So ABBV as in Victor. And they were spun off from Abbott Labs in 2013, but they're quite enormous. They're really big cap. But their main drug is Humira, and you might have seen ads for it on TV even because it's for rheumatoid arthritis. It's the main drug for arthritis. Just this last quarter, it had over $4 billion in sales. It does make up 64% of AbbVie's current sales, which is a little bit worrisome because it's so huge. But the analysts believe AbbVie has a nice pipeline. So they're going to have some other drugs that are going to be coming more into the picture as Humira faces some competitive pressures in the next couple of years, because they always do. And they expect some of those other drugs to, actually add to the bottom line here too. So the earnings growth is expected to be 11% this year and 18% next year. So I like to see that. Like, it's already double digits and it's going to get even better. They have a PEG ratio of 0.9, so it is under the 1, and their PE is only 14. So AbbVie is one you definitely should be checking out. A mid-cap company I found, and I'm not familiar with this one at all, so I doubt many of you are either, but they've been around a while, is called Berry Plastics Group, and the ticker is BERY, just like it sounds, the berry. And they are a plastics company with about a $5 billion market cap, so the mid cap, like I said. And they've been acquiring a whole bunch of companies. So they have consumer packaging with plastics, health, hygiene, and specialty, and then engineered materials. Now, they just had a couple of good acquisitions. So their health and hygiene area was really strong this last quarter. The volumes were up 7% there. Their old consumer packaging, that's kind of like their legacy business, that saw slightly lower volumes, so that wasn't that great. But Berry has really strong cash flow. They're paying down debt. They have the stable end market, because anyone who, these food companies and beverage companies, they're not going anywhere. They're still going to be making everything that they need this plastic for. So, they got a lot of good stuff going on, and including maybe some further M&A. So their P is a little bit higher at 18.8, but they still have a PEG ratio just under 1 at 0.98, which is basically 1. But their growth is really good, which is why you have the higher PE, but you still got the PEG, because 2016 earnings growth up 33%. I think some of that has to do with this acquisition that they just recently had, but that's okay, because 2017, they're still supposed to see a further 15% earnings growth. And that's really strong, especially for a company like this in this plastics area. And then the third company I have is an airline. I know, I can't believe I'm saying this. Hawaiian Holdings. Their ticker is HA. The airlines can be value traps, and they can look real good, and they have real low PEs, and you're like, wow, it's so cheap, but they run into problems with capacity. And when things are good, like right now with lower fuel prices, they add a ton of routes, and then they get in these fare wars, which I just have been seeing. This isn't Hawaiian, but like, for instance, WOW Airlines, which is from Iceland, has just been offering Newark to London routes over the winter. So it's the off season for $299. And we were debating here at Zacks, several of us, how anyone is making money off of $299. So you have to watch out for capacity and fare wars with the airlines. But Hawaiian Holdings obviously is Hawaiian Airlines out of Hawaii. They don't have a monopoly on Hawaii, but they offer the most flights in and out of the islands over to the mainland. And they also fly inter-island, as well as flying cargo and mail and things like that inter-island. So they have a strong business. I like them right now also because of the Zika. I do think some people will change their travel plans this coming winter, and they won't go to the Caribbean or Mexico for vacation. They will look towards Hawaii, which, knock on wood, so far has not seen the Zika. So I think they're going to go that way. Their PE is only 9. They have a PEG of 0.7 because they are expected to grow earnings 58% this year. Now, the only caveat is that some of the analysts do see some weakening for 2017, which isn't my favorite. So I'm not sure about Hawaiian Holdings for the longer term into 2017, but they're supposed to see an earnings decline of 11% heading into that. And I think maybe some of that might also be because they expect fuel prices to rise a little bit here. So those are the 3 stocks. I also saw a lot of other ones in the healthcare area with PEGs under 1, including like Horizon Pharmaceuticals. Mylan was under 1 because, again, they all got beaten down after Valiant. I saw a lot of home builders. That's an area where it did real well in 2012. It was the best performing sector, and then it's done nothing since then. It's not like they're not building houses and they're not growing their earnings, but it's really out of favor sector because no one knows when, mortgage rates might go up and that market might cool. But some of the home builders I saw were Toll Brothers, which is TOL, and Pulte, PHM. So you might want to check out those two areas. And, I really tell people that make sure you do your research, because PEG and the earnings growth aren't just the place to start. You can find, those fundamentals, and then you can dig into the company further to see what's really going on. So, I really think value investors can be growth investors, but you have to know, just where to look and really use that PEG ratio, because it's a great criteria to use to find the growth. If you want even more value ideas, you can also follow me on Zacks.com, because I write some articles over there on value, and you would get them automatically if you follow the author. Or you can follow me on Twitter, although if you're on Twitter, you'll have to deal with my weather tweets and my craziness about hurricanes and tornadoes. So you might want to bypass that and go directly to Stock Twits, where I'm on there at Tracy Reinick. It's just my name, at Tracy Reinick. You can get all the stock tweets, because I don't talk about the weather over there, on Stock Twits, which is the Twitter for stocks. So remember, value investing doesn't have to be boring. We can find growth too. We're not going to buy Amazon or Facebook, but you'd be surprised at some of these other hidden gems that turn out to be big winners, if you hold them for the long term. So I'll see you next week with some more value ideas.
Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio Service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.